can't really wrap my head around their current dividend at the moment. Altria stock, ticker symbol is MO. It's currently $42 per share at the moment. It pays 98 cents per share 4 times a year. That gives it a dividend yield of 9.3%. So for every €100 that you put in, you'll receive €9.3 per year. So it's quite a lot. It's very high. Now they do have a good track record of dividends, but they have massive debt at the moment, and their dividend payout ratio is 98%. So that means that 98% of their profits are paid out as a dividend. And all of the articles and videos and things I see about it are either it's a yield trap or it has a great track record, so I trust it. So if you do want to take the risk, the next ex-dividend date is the 20th of December, because we just had one in September. And I bought this stock first on the 31st of March of 2021, and it's been on a bit of a downtrend, as a lot of them have been. But I imagine that Altria is going to cut its dividend pretty soon. I think a lot of people will buy in now hoping for a 9.3% yield, and then they could easily half the dividend because their debt is through the roof, 110% debt to assets ratio. But we'll have a look through and see why people trust this stock so much. If you're investing in the stock market for a long time at all, you will have heard past performance is no indication of future performance. And this could be one of those learning curve stocks where you learn the harsh lesson as to why you don't assume it's going to be better in the future than it was in the past. So the general gist of Altria Group is that they sell tobacco products. They're based in the United States, quite a big company, 6,300 employees. And I'll leave this up here if you want to have a read through it. The current market cap of Altria is about $75 billion. They have a current revenue of $25 billion, a PE ratio of 12.93. And when I had a look at the average PE ratio for the tobacco industry in the United States, it was 16. So this is trading below, which means it's better. Earnings per share is pretty healthy, $3.26. Massive dividend yield of 9.3%. And it's just down here where we see the devastating debt to assets ratio, 110%. Now, looking at that, it looks absolutely awful. But McDonald's has a similar debt to assets ratio, very, very high, over 100%. But I just don't know how they're paying a 9.3% dividend yield. They're paying 98% of their profits out as a dividend. And I've seen quite a few articles about them raising the dividend. Yeah, so I'll leave the financial summary just up here if you want to have a look at it, but quite a bit of bad news. There is good news in net income applicable to common stockholders increased 37%, revenue decrease of 2%, another revenue decrease of 2%, all other segment decrease of 53%. So I really don't understand it, to be honest. I'm very curious to see what happens in the future with these. I can imagine it could be a similar situation to AT&T. They just have a massive dividend cut. Well, time will tell. So they have an annual profit margin of about 23% and a quarterly profit margin of 32%. The current debt to assets over the last year is 110%. So they have about $37 billion in total assets, stuff they own, and about $41 billion in total liabilities, which is stuff that they owe. Over the last quarter, it's the same, 110%. And their annual cash flow from operating is $8.2 billion. From investing is about $780 million. And from financing is negative $9.5 billion. So it makes me nervous, to be honest with you. Now, like any other stock in my portfolio, I'm not going to give it much more weight compared to anything else. So if they go bankrupt tomorrow, I'll lose less than 1% of my portfolio. So it's not too scary, but I can imagine that some people who could have gone all in on Altria are a little bit worried at the moment. Could have been getting very nice dividends up until maybe even this year. They could cut it, because to me it makes sense for them to cut the dividend. But we'll have a look at their long-term graph now. So it's pretty much the whole history. And it does look good. Growth-wise, it looks good. And I would love to have a good dig and see what their kind of financials and their debt was through all this time. But look, it's just growing, growing, growing. Now, they're a tobacco company. And as far as I know, it's reasonably cheap to produce tobacco. But if you can create a cheap product and it's highly addictive and sell it for quite a big profit margin, you're in a pretty good business. Coffee is another one I would think of. But here we are now, $42. And I honestly don't know what way it's going to go. Just at the way it's kind of dipping down here, I'd imagine that it will drop a little further. We could even end up down here. But I don't think this is a company that will go to zero, because it's just so large, so well established, which is obviously no guarantee of success. They could have a terrible management team that runs the business into the ground. But I think as a business, selling tobacco and tobacco products does have a long term life. Now, it may not be cigarettes, it may not be rolling tobacco, it could be into e cigs, it could be into some of the healthier options, if you want to call them that. The disposable vapes are huge here at the moment. Or it could be them getting into selling legal cannabis. I don't know. But as far as growth goes, that is a nice long term graph. But yeah, it's a very tough one to call. I do think it's a bit of a trap at the moment. But I'll show you the long term dividend history as well, which is steadily growing. So this is it here, going back to 2006 on the Dividend Max website. So when it says final, that just means one per year. If there's interim and final, that's 1 and 2 per year. A lot of UK companies pay interims and then finals. And then quarterly is 4 times per year. They started paying the quarterly dividend in 2010 by the looks of it, even though they only paid 3. And then from then on, they paid 4 times a year, and it is growing. As time goes on, it goes up a few pennies every year. They seem to pay the same amount all year. And then at the end of the year, they up it. We've gone from 40 cents up to 98 cents a share, which is crazy high yield. I don't really understand how they can raise it so much. I do think it's in their best interest to drop it, but to be honest, what do I know? And I'm just worried about the debt and the fact that they're paying 98% of their profits out to shareholders as a dividend. But either way, like 9% is very high dividend yield, and 98% dividend payout ratio is huge. So it really has me baffled, this one. But anyway, I'll do a little summary of what I've been talking about, and then you can have a look and make your own mind up yourself. So Altria Group, ticker symbol is MO. It's currently $42 per share at the moment, and it pays 98 cents per share 4 times a year. That gives it a dividend yield of 9.3%. The next ex-dividend date is the 20th of December if you want to take the chance. And they're currently paying 98% of their profits out to shareholders at the moment, which is very, very high. So I honestly don't know what to think. I do think it's a bit of a trap at the moment, and they could just drop the dividend tomorrow. But I am going to obviously keep my position, and I think if I have a little bit of money at payday, I have €10 waiting to go in, but I'll probably add in maybe another 40 or €50 and then leave it, because that'll be €100 in there. That's kind of my general goal for every stock in the portfolio to start with. So let me know what you think. Do you think it's a good stock, or do you think it's a yield trap at the moment? Because it does have a good history, but it has an absolute mountain of debt at the moment. Anyway, let me know what you think.